Hey everybody, welcome to Bald Guy Money. My first experience with a financial advisor was about 20 years ago when I wanted to learn a little more about investing. Since then, I've met many financial advisors, some good, some bad, and some have actually become close friends. But if there's one thing they all have in common, it's that none of them, well, maybe at least very few of them, will advise you to buy physical gold and silver. And in this video, I want to cover why financial advisors don't recommend gold and silver, and then I want to go one level deeper and talk about why institutions and mainstream media have conditioned them and other people to think gold and silver are not worth your time or money. And I also want to cover what incentives all of these stakeholders have to keep you out of metals and in the traditional 60-40 portfolio. Now, as we begin, I want to be clear that I'm not a financial advisor, and I have nothing against financial advisors. As I said at the beginning of the video, I count some financial advisors amongst my closest friends. But when it comes to understanding exactly why financial advisors purposely steer people away from metals, the first thing you have to understand is that the term financial advisor is really just a fancy way to say financial product salesperson. And that's not to put them down in any way. I have met many financial advisors who are experts in the products they sell, and some who understand money and finance far better than I do. But, and what I'm about to say applies to any salesperson, they can't sell you things that they don't have in their portfolio of products. And the fact is, none of the major financial services companies keeps little safes full of gold and silver in their offices to sell to customers when they come in. And we'll talk about why in a moment. But think of it like this. A car salesman is trained to sell you a car. He knows the cars he sells inside and out. But if what you really need is a motorcycle, he's not going to tell you, yeah, go buy a motorcycle. No, he's going to try to convince you that it's a car you need. And the same applies to gold and silver for financial advisors. They are not going to advise you to buy something they are not selling. Coming to our next reason, and this explains why financial advisors don't have gold and silver in their offer, it's because they want your money. They want to hold it, control it, manage it, and they want all of it. It does them no good if you hand them money and they hand you gold and silver back in return. For a financial advisor, that kind of transaction is a wash. It's money for money, and it limits the amount of money they are able to make off of you, because that's the ultimate goal, is to generate sales and revenue. You making money is just a nice side effect for many financial advisors, if making money is something that happens at all for you. And that brings us to reason number 3. Gold and silver are long-term holds. I think the majority of my viewers understand that fact, and for a financial advisor, having that much capital frozen for a long period of time does them no good. And the reason is that most financial advisors aren't selling long-term solutions. They're selling medium-term solutions because every time they move your money, or they get a little bit more of it, and that's usually why they want you in these 10 and 20-year plans, it's to keep money flowing in their direction. Because as long as the money is flowing in their direction, they keep getting a little piece of that money. And if you have money in physical gold and silver, that means that is a certain part of your net worth that they can't get their hands on. It's inaccessible for them. And because of that, they are unable to move it around. Meaning, when the next investment product launches, and they're offering a trip to Hawaii for the top seller, and yes, those types of contests exist for financial advisors, it means their chances of going to Hawaii are lower if your money is stuck in coins hidden in a safe somewhere. And this is where we come to the part of the video about where I talk about why things are structured this way, because ultimately it's a game of power and greed. Think of it like a pyramid scheme, where we're at the bottom feeding money into a system we've been conditioned to believe by schools, by the media is our only chance at having a decent life. And the heads of banks and other institutions are on top. And from the power side of things, they're working in cooperation with the governments of the world, with institutions like the World Economic Forum, developing phony investment ideas like ESG and diversity, equity, and inclusion to push their social and economic agendas with your retirement money. And the more of our money they have to direct in funds they've had a hand in creating, sold to you by financial advisors who are just trying to do a job to put food on their tables, the greater influence they have. And we have seen that firsthand over the last 40 years in the rise of the state and the shady organizations they cooperate with. Now, from the greed side, having convinced you this is the best and only way to secure your future, they take control of your money, the fruit of your labor, and they charge you fees. For example, if you're in one of these medium to long-term programs with an advisor, that's 1 or 2% that they take every year just as a management fee. And you should really look into what kind of fees you're paying for whatever investment programs you've gotten into with a financial advisor. What's more is, if you decide to take your advisor's advice and move into a new market opportunity, that's another fee to move your money out of the previous fund and into the new one. And all of these fees, although they seem small, they add up over time. And as you can see here on this chart, a simple 1% annual fee significantly eats in to your returns and generates major income for banks and financial advisors who sell these products to you. And how this all ties in with gold and with silver is that when you have those things in your possession, that's wealth that you hold and that you control. And it's wealth the banks and financial advisors can't get a small piece of every year. And that's ultimately why the people who are on top own gold and own silver, but have constructed the system in a way that makes its value less obvious to the average Joe. And while the S&P 500 starts to put in bearish patterns, signaling the end of the bear market rally that we're in right now, and likely a major leg down in the stock market, which will be led by tech companies, mark my words, from my point of view, people who listen to their financial advisors blindly and ignore both the safety and opportunity gold and silver represent right now are going to end up suffering the most. And we'll switch over to a gold chart really quickly because we are seeing gold remain remarkably resilient, despite the strength in the Dixie Dollar Index right now, which is above 105. And I want to mention that the last 2 times the dollar has been this strong at this level, gold was around $1,810 an ounce, and silver was trading around $20 an ounce. And this is telling us something. And what it's telling us is that there is a lot of demand for metals right now. And it's not coming from regular retail investors in the West. Not yet. And once we start to see the dollar cool off, and the inevitable Federal Reserve rate pause, which we know is coming, the upward move on gold could be quite significant, bringing miners, which I have said multiple times on this channel are underinvested right now. They are one of the few deals in this overpriced market today. It's going to bring those mining stocks right up with it and likely at a higher percentage increase than gold or silver themselves. And this is where I'd like to introduce the sponsor for this video, West Red Lake Gold Mines. And you can see their ticker symbol right here on the screen. West Red Lake Gold Mines is a Canadian-based mineral exploration company, so that's as stable a jurisdiction as you're going to get. And right now, they're focused on advancing and developing their flagship Madsen gold mine and the associated 47 square kilometer area in the Red Lake District of Ontario. So, for you viewers who were asking me recently about USA and Canada-based miners because your biggest concern is jurisdiction stability, here is one for you to look at. Now, taking a look at the chart, you can see this stock has been ripping so far this year. And that's what happens with these small cap miners. But despite the rip, If we look at the daily technicals and oscillators on TradingView, you can see that this stock is still a buy according to their analysis. And considering the fact that they have a market capitalization of only 56 million US dollars and are working on this Madsen Gold project, a location with $350 million in investments already made into it, whilst carrying no debt on the project, I think it's definitely worth your time to check out. Especially when you consider the fact that the management team is buying this stock right now. They're not out here dumping and sucking liquidity out of the company. And I suppose that might have something to do with the leadership team led by CEO Shane Williams, who has a lot of experience in growing the share price in the companies he's led over the years. And considering that experience, paired with the fact that he is taking over for a leadership team that mismanaged this investment during C19, it's very possible that this company could reach a conservative market cap of $350 million, equaling the investments made in the project, all the way up to $1 billion, which was the company's high before that mismanagement under the previous team started. And that translates to a potential 5 to 15x on any investment made today. Of course, please do your own research before buying any stock. I will link up the company's website in the description for those of you who want to dig deeper. And before I move on to this video's viewer question, I want to express my gratitude to West Red Lake Gold Mines for supporting this channel and working with me to get this message out to my community. Thank you guys very much. And now for this video's viewer question. And it comes from MCBC8, I hope I said that correctly. And he asked, as a comment to my last video, about things you need to know in case of an economic collapse. If everything comes crashing down, who is going to buy or trade for your gold and silver? And that is a great question. Because most people, when thinking about a total collapse in their country, or a war, or an invasion, are under the false impression that everything stops in one day. But history has taught us that it just doesn't work that way. And I'm going to bring up some images of what it looks like in reality for Ukrainians who were and still are leaving their country as the war against Russia rages on. Because in reality, if you have to flee, which was a major topic that I touched on in that video, this is what it looks like. And why I bring up this situation in particular is because those people who fled with the native currency, the Ukrainian hryvnia, found that nobody wanted them. I mean, if a country is at war, what sane person would take their currency? The obvious result of the war will be inflation as they print currency to fight the war. And in reality, for those Ukrainians who got out, it was gold, silver, Bitcoin, the euro, and the US dollar that they were able to start over with. And if you're a viewer in the USA or in the European Union, and those are your currencies, so the US dollar and the euro, keep this in mind. Because gold and silver are universal. If the dollar or euro run into trouble tomorrow and you need to leave your country and take it with you somewhere, you might learn the hard lesson that many Ukrainians did. And that is, you can escape the war, you can escape collapse, but don't expect anyone to recognize your native currency wherever it is you end up. And that's why I'm so passionate about talking about gold and silver, especially as an insurance policy, because ultimately, as many Ukrainian people learned, it's better to have it and not need it than to need it and not have it. With that said, that's it for this video. I thank you all for watching. As I say in every video, take care of yourselves and take care of each other. I'm wishing you a fantastic Sunday ahead, as well as a great week ahead. See you all in the next one. Goodbye.